Let's bring on board our guests for the show today. Kunal, as usual, is joining us. Kunal Bothra as well as Nuresh. And on the fundamental today, we also have Sandip Sabharwal joining us. Kunal, I'm going to come to you first. Help us make sense of the market move that we're seeing, because today even the broader markets have given up the support that they have been lending to the markets for the last couple of trading sessions. And small cap, that has been the real outperformer so far, is also underperforming the markets. In fact, all of its peer indices, it's been underperforming a 1% cut coming in on the small cap index today. Tell us what levels you are spotting on the Nifty as well as the small cap going ahead then.
Good afternoon. Again, I would believe that it's more of a consolidated day rather than reading too much on the 70, 80 point drop on the Nifty. I look at it this way that previous week, Thursday, we had almost like a 200, 250 pointer move for the Nifty. That created a strong bullish green candlestick for the index. Post that, the next subsequent 5 days, including today, we are trading into a range, and we have still not been, completing this 50% band of that green candle which was formed on the previous Thursday for the indices. So net, that means that the markets over the last 4 to 5 days was consolidating, is going through a consolidation. The tough data point for the markets today, of course, is the weakening market breadth, where for the first time, I think the last many days, you have a lot more divergence in terms of the advanced time ratio. But the positive data points, what we are seeing today right now, is that the put call ratio for the Nifty is come back to zero point 0.5 levels. Now, this could probably be an indication that over the next 1 or 2 days, or maybe with another maybe a 50-point drop, we could be looking at hitting oversold territories on the Nifty on the spot level. So that means we could be very close towards hitting a bottom. 24,500 remains to be a key base. I think any dips towards that level on the spot basis, traders should look at a buying opportunity.
All right, so that's the take coming in from Kunal on the markets. Naresh, let me come to you and what's happening in the IT index then, because it is actually bucking the overall market weakness while rest of the sectors are struggling to make a comeback. You have IT index still holding on to good strong gains of by 0.8%. Major large cap players are also seeing good momentum. What's your take coming in on the IT index? It is going to continue hitting the record high levels through the course of the month?
Seen good correlation between Indian IT stocks as well as Nasdaq. For now, Nasdaq continues to be strong. Yesterday was a strong day over there. And then we look at our stocks, something like an Infosys has come back above the highs of 2021 after 3 years. You have a lot of stocks, even in the IT pack, still 20% down from 2021 highs. So there could be strength selectively. Overall, the index has made new all-time highs even today. So the structure is positive for IT. One has to be more selective. So Infosys looks interesting, or LTI Mindtree. So there are many options, but the leadership is clear. It's IT and then it is banks.
Leadership is seen in the ITs and then maybe some of the banking names. But Sandeep, hi, very good afternoon. Wanted your take, Sandeep, on the cement counters then, because what we are seeing is that just yesterday, all these companies had a great move today. It's been quite a flattish day coming in for them, but specifically one of the stocks is actually Star Cement. I don't know why, but the stock is having good gains in today's trading session. But overall, Sandeep, what we are hearing is a lot of reports on the price hikes, but some of the experts are also saying that these price hikes are unlikely to be sustainable. So what is your understanding on the cement pack, and what should be one strategy?
On the cement side, like it's been now 1.5 years when cement companies have been trying to increase prices, but the price hikes have not sustained simply because of the fact that the supply is much more than the demand. So the supply increases over the last 1.5 years, and what are expected over the next 2 years are much greater than what the demand increases. Now, there could be demand optimism because real estate is doing well, infra projects are doing well, etc. But that's not reflected so much in the numbers. But next year could be better for volumes overall. But a lot of the optimism related to increase in prices, I think, might not play out. And the valuations of cement companies across the board are not cheap. I think the stocks trade at very rich valuations, given that it's a commodity and the fact that we'll still be in oversupply for the next 2-3 years at least. So I would be cautious on the sector.
View coming in from Sandeep on the cement space.
If you like this video, then like, share and subscribe to ET Now.